If you're self-employed and trying to buy a home, you've probably heard some version of this line. Come back when your tax returns look better. That's got to be one of the most frustrating things to hear when you know that your business is solid, your cash flow is good, and you're doing everything right as an entrepreneur. So in this video, I'm going to walk you through how buying a home actually works when you're self-employed. Some of the traps that can catch a lot of entrepreneurs off guard, and the steps that you can take right now to set yourself up for an approval that you're going to feel good about. My name is Ian Anderson with Fisherman Mortgage Services down here in Florida, and I am thankful to be ranked as one of the top 1% of loan officers here in the state. My team and I spend a huge chunk of our time helping business owners and self-employed buyers make this leap into home ownership without having to change who they are or what they do for a living. So let's start with the core problem, because understanding this will make everything else click. Traditional mortgages are built for W-2 employees. The system is designed for someone who gets the same paycheck week in and week out and has very few write-offs. Those people whose tax return line up almost perfectly by what's hitting their bank account. As an entrepreneur, you're playing a completely different game. You might have amazing revenue, but by the time your CPA is done doing their job, taking every legal deduction, you end up showing a much smaller net income on paper. Here's the kicker. Most standard mortgage programs do not care that your business brings in strong top-line numbers. They care about that net income after expenses. So if you're writing off your truck, your equipment, your home office, meals, travel, all the things that make sense for taxes, you can actually shrink the income a lender is allowed to use. That's why someone who feels very comfortable with their cash flow can still get a no from a lender only looking at a couple of lines on a tax return. Now, that doesn't mean you can't buy a house. It just means that we've got to come up with the right strategy. Concept one is understanding your income story the way an underwriter will see it. When we look at a self-employed file, we're not just glancing at your tax returns and hoping for the best. We're piecing together a story from your tax returns, your bank statements, and the way your business is structured. For example, if you're a single member LLC, the way we read your income is going to be different than if you're paying yourself a W-2 from an S Corp. If you've had a huge jump, like a really big jump in income from one year to the next, we need to explain why. Maybe you added a new service line, landed a big contract, or finally stopped underpricing yourself. If you have one slow season every year, say you're in a tourism related business like here in Florida, and summer is off, but your other months are strong. We want to see that pattern across your statements. So a lot of people are surprised, but we're actually looking at all of these details, especially like are deposits consistently from your business activity? Or do we see big random transfers that look like loans from friends? So those are all the type of things that an underwriter will ask you about. Concept two is using the right documentation for the way we really operate. For some self-employed buyers, traditional full document loans actually still work. If your tax returns show solid net income for the last couple of years and your other debts are manageable, we may be able to put you into a standard program with pretty darn competitive terms. But for a lot of business owners who write off aggressively, we lean on more flexible documentation options. One common approach is using a longer history of bank statements, business or personal, or sometimes a combination, to average out your actual deposits. Think of it like this. Instead of staring at one number on page one of your tax return, we're looking at a year or two of your business life in motion. How much is really coming in? Is there a clear pattern? Is it actual business revenue, not just money sloshing around between two accounts? Based on that, there are programs that will let us build your qualifying income off of those average deposits as long as everything else lines up. This can be a game changer if your tax returns are weighed down by write-offs, but your bank statements, of course, tell a different story. Concept three is preparation. This is where most entrepreneurs either win or lose the game. What tanks a lot of self-employed applications isn't that the business is bad, it's that the file is messy. And you've got personal and business expense mixed in one account, big unlabeled cash deposits and transfers between 6 different accounts with no notes. Maybe a random big payment from a friend that looks like income, but actually isn't. An underwriter doesn't have any time to guess what any of that is. So here's what a clean mortgage-ready setup looks like in real life. First, separate your business and your personal accounts, if you haven't already. When money comes from clients, it goes into the business account. When you pay yourself, you move it clearly into the personal or owner pay or salary account, right? Second, for 3 to 6 months leading up to your home search, be extra intentional about what hits those accounts. If a family member is going to help you with funds, don't just have them drop a big random transfer into your checking without us knowing. Talk to us first so that we can structure the right way and paper trail it. Third, keep an eye on your existing debts. If you're about to finance a new vehicle or open up a big line of credit for equipment, that might be worth timing around your home purchase because those new monthly payments can directly affect what you qualify for. You don't have to be perfect, but a little strategy here goes a long way. Now, I know this can sound like a lot, and that's exactly why I put together a detailed guide just for self-employed buyers. It breaks this down into plain English checklists. What to do with your bank accounts, what underwriters will zero in on, how different types of businesses are looked at, and how to avoid the common gotchas that slow people down or cause last minute surprises. Trying to figure all this out from a random Google search is a headache. So I pulled it all into one place for you. You can grab that free guide just using the link down in the description. And if you're in Florida and you'd rather just walk through your numbers with an actual human being, there's a link down there to book a strategy call with my team. We'll look at your actual business, your goals, and give you a game plan. Here's what you can do right now. Here's what might be possible in a few months with a couple tweaks. And here's what documents you'll want to have ready. So don't let being self-employed convince you that homeownership is just out of reach. You just need someone who plays this game every day to help you line things up. Click the link in the description or grab the guide or book a strategy call with our team, and we'll help you map out your next move. And if you found this video helpful, feel free to subscribe, and we'll see you next time.